Today, Coinbase scores a license to operate in the European Union. The Department of Justice seizes $250 million linked to crypto investment scams. And after the Senate advanced stablecoin regulation this week, George of EarnOS discusses the potential for major retailers to adopt dollar-pegged tokens. Welcome to CNBC's Crypto World. I'm Brandon Gomez. Crypto prices are little changed as we head into the weekend. At noon Eastern, Bitcoin hovered at the $104,000 level as investors assess the next move from the Federal Reserve on interest rates and from President Trump on tensions in the Middle East. Ether traded at $2,494, and Solana dipped just a bit to $142. The story is much the same for the week. Bitcoin and Ether are both slightly lower in the past 7 days, about 0.9% and 1.5% respectively. Okay, let's talk about the top stories. Coinbase just obtained a license to operate in the EU. The company announced today it secured a MiCA license in Luxembourg, marking the move from its previous EU hub since 2023, Ireland. Its CEO, Brian Armstrong, told CNBC that Coinbase is, quote, all in on Europe, and that it's advocating for crypto's future across the continent. Other exchanges approved to operate in the region include BitGo, OKX, and BitGo. By noon, Coinbase shares were up 4.3%. Next, the Department of Justice seized $250 million tied to crypto investment scams. The DOJ targeted $225.3 million in lost funds across more than 400 victims, dozens of which are in the U.S. The Secret Service, which teamed up with the FBI and private partners to trace the funds, is calling this the largest crypto seizure for its department to date. These scams, often referred to as pig butchering schemes, happen when victims are tricked into depositing their money into illegitimate crypto platforms or ventures. For more on pig butchering scams and how blockchain investigators can track these funds, check out the explainer we have on cnbc.com/cryptoworld. Last, Tether CEO Paolo Ardoino joined CNBC's Squawk Box this morning to react to the Senate's passing of the Genius Act. The bill now heads to the House of Representatives, which has been considering its own stablecoin regulation, the Stable Act.
We are aware of the House interested to combine the Market Structure Bill and the Genius Act. We at this point we are sitting and watching. We want to be helpful. We want to provide a contribution with thoughts and explain how stablecoins are very important for all the emerging markets, developing countries that are the countries where we operate for the most.
Now, among the provisions in the Genius Act is a reserve requirement for stablecoin issuers. Ardoino said that Tether's USDT remains over-collateralized, with about $6 billion more than required reserves, on top of another $15 billion within the Tether company. When speaking to Crypto World at Bitcoin 2025, he also explained why the company chooses to use treasuries for its reserves instead of pure cash. You can check out that interview at cnbc.com/cryptoworld. Let's stick with stablecoins for our main story. With the advancement of the Genius Act and the successful IPO of Circle, many companies are considering how stablecoins might fit into their businesses. JP Morgan announcing this week it's launching a stablecoin-like deposit token, JPMD. The bank says the token is meant to represent a commercial bank deposit and will operate on Coinbase's Base platform. And speaking of Coinbase, the crypto exchange announced a new payments platform to let merchants accept stablecoins. Crypto World's Mackenzie Sigalos spoke to George, founder of the Web3-powered brand rewards platform EarnOS, about the likelihood that retailers could look to stablecoins.
So EarnOS is at the intersection of brands rewarding customers and using blockchain to do it. And I'm curious for your take on this idea that brands might start looking to use stablecoins in their businesses. We saw this report from the Wall Street Journal that said giants like Amazon and Walmart could look to stablecoins to skirt some transaction fees charged by cards. So are we at this inflection point for crypto? And how quickly are we about to integrate stablecoins into businesses?
Yeah, I think more and more businesses are going to be using stable coins and crypto every single day from now on. Obviously, the Genius Act sort of accelerates that. But in general, I expect that what we're going to see is brands using stable coins and crypto without even really realizing it. They're going to be using different platforms like Stripe, which are obviously integrating stable coins into their core business model. And before they know it, they'll be sending money all around the world in internet native money just because it's cheaper, faster, and easier.
Now, it seems like stablecoins are taking off mostly because businesses have figured out how to use them, not because customers have started to ask for them, at least in developed countries. So, is that where the real unlock for crypto and stablecoins specifically is? B2B versus involving the customer who may not care how they pay so much?
I think it's interesting about how they pay, but it's also interesting about how they can be paid. So, because of stablecoins, for the first time in history, anyone in the world can be paid who has a laptop or a mobile phone in stablecoins. So, a US company can pay anyone anywhere in the world without having to use Swift and other traditional money transfer systems. Instead, they can just pay a person directly for any particular outcome. And I think that that's kind of a big reason why we're seeing a lot of enterprise and business adoption is because they can now transact with the world rather than just transact with the country in which they're operating.
And I certainly understand the incentive from a merchant perspective, but it's always that disconnect to the customer, where in a country like the US, for example, where these credit card networks offer perks that aren't yet matched by the stablecoin companies, what is the incentive for a customer? And are you seeing that kind of appetite for the end user to operate in stablecoins?
I think the main reason that users would want to use stablecoins is basically because they can transact faster, they can transact with more systems internationally rather than worrying about only transacting with systems in certain countries. So it's more taking money truly international and meaning that it can move in a more borderless, accelerated fashion. But I do think that most of the growth that you're going to see is going to be encouraged by brands and users inadvertently using it rather than users demanding it and then businesses using it.
Yeah, the conversation I've had with a lot of people always comes back to the fact that the stablecoin companies are going to have to build out a more robust infrastructure around rewards in order to like create that kind of incentive where customers would say, "Hey, I'll put down my Amex and I'm going to use a stablecoin based payment platform instead because I'm getting similar perks." And so that seems to be how you might bridge the divide there. From a regulatory standpoint, though, you're based in Australia. I'm sure you're no doubt watching what's going on in the US in terms of regulation. So, from an outside point of view, is the US a leader now when it comes to crypto rules, or what still needs to change?
Well, I think the US is a leader anyway because of the fact that the US dollar is so in demand globally, and obviously USDC and USDT are the most issued stablecoins in the world. So I think things like the Genius Act passing give a lot more certainty, not just for US based companies, but for international companies like ours, where we're sort of looking to make sure that the more regulation is formed, the more certainty it gives to operators like us. But it also gives certainty to brands and enterprises that want to use stablecoins in their business and want to know that it's safe and easy and supported and regulatory compliant to do so.
So one of the big unlocks of the Genius Act is the fact that it really opens the door for banks and other retailers to be able to issue their own stable coins. It seems like once this is passed into law, we could see the floodgate open to a lot of competitors to a USDC or a USDT. Any thoughts on that?
Yeah, I mean, I think that as more and more providers make it easier for anyone to issue their own stablecoins, we're just going to see that as less of a point of difference. Basically, the way that I look at it is as more and more companies have an incentive to issue a stable coin, then more and more of the world's more of the world's money becomes internet native money, and that just grows out the ecosystem. So while at the moment issuing your own stable coin is a point of difference, it probably won't be a point of difference in a few years' time. But what it would have resulted in is a faster level of adoption and acceptance of stablecoins as a global technology.
I mean, right now it's very much a duopoly, the stablecoin market. If we see the Wall Street banks come together behind their own unified stablecoin, or if Amazon and Walmart are indeed going to launch something similar to that, do you see them taking appreciable share of the market, or do you think this is really something where, the first movers, your Tethers and Circles of the world would remain firm market leaders?
Yeah, I mean, I think that companies like Stripe have a significant advantage because they sit in the middle of so much payment and settlement. But already we've seen the stablecoin platforms be responsible for more transmission of money in the trillions of dollars than even Stripe itself. But with Stripe making the recent bridge acquisition, we might see more and more of them capturing the markets. The actual end consumer platforms, I think that they'll make a dent, but I think that Circle definitely has a significant advantage from its early starting point.
Last question for you. In terms of your brand and the involvement of blockchain, why was that the choice for your business? What sort of edge does it give you?
Well, our company is the internet's reward program, right? So we're focused on allowing any brand on earth to reward any person on earth for what they do and who they are. And that means that the any person on earth means that we need to be able to reward anyone on the planet instantly when they perform a task or activity that a brand wants them to do. So realistically, it wasn't a choice. The only technology that could be used was internet native money, and that meant that stablecoins is where we had to start building. And so 2 years ago, we started building, and now with all of the recent regulatory changes and Stripe purchasing Bridge and things like that, we're seeing a huge amount of brand adoption and a huge amount of interest from brands, from users, from VCs, basically everywhere.
Okay, that's all for Crypto World this week. We are back again on Monday. We will see you then.